Hey traders, this is Ron. Happy Thursday. Hope you guys had a great day. As always, everything in this presentation is for educational purposes only. We'll kick off here with the diamonds. Again, there's the December low, just like the SPY and the Qs. We're sitting there at fresh new all-time closing highs. There wasn't a whole lot of change today in the major averages. Bulls have the edge. Now, I had a question on Disney and how we could be prepared for this type of move. If I zoom in a little closer here, we can see the stock, from basically the end of July, August was coming down, and then magically, pun intended, the stock jumps higher. Well, remember, I'm part of another company called Financial as well, and I highlight the seasonality for you guys here. If you go to search seasonality inside financial.com, just type in ticker symbol DIS, and we can see here how the stock historically trends. And this is what I highlighted the other day. But we knew this from the past couple years doing these videos, for free at Market Tamer and then also over at Financial. This is the window of time when Disney rocks. So this is no surprise because it's what it historically does. And if I take a little snippet here, let me do this. And I'll just draw for you. Take a peek right here. This is the dotted line. This is the probabilistic future price. This is all based on historical data, the stock's own historical data. So it's not rocket science, right? There's no proprietary algorithm. This is just what the stock historically does. And we saw that as much as 80% of the time between now and spring, the stock goes higher. And that's exactly what it's doing. That's how we could be prepared for that not surprise gap up. And after the gap up occurred, we could consider going long. And then you walk in a couple days later, yesterday, you see Disney Plus news, and magically good news happens. It's what the big money typically seems to do with Disney. I don't say that, the data says that. It's just what it does. So those folks that knew about Disney, which should be almost everybody watching these videos, especially been following me for almost 2 years, 3 years now at Financial, it's just the data. It's really nothing special. But then notice it peaks out basically in May and June, right around here, and then the stock starts to drift lower. Doesn't mean it's going to crash, but the big money is no longer interested in aggregate being long, you could say. This is when the push is, and that's when it leaves. Disney's one of the most seasonal stocks out there. Go back again and look 3 years. Last year, did it work so well? Not so much because the market was crashing. 2 years prior, there were moves in there, and that was incredible. So Disney was just an amazingly awesome stock again this year. One other thing we can do at Financials, we can also drop in the best period, and we can say, hey, when's the best 15, when's the best 16 or 18-week period to own Disney? We can move this slider, and what do you see? That green line tells us exactly what the stock has historically done. And if you wanted to know when the biggest move is throughout the year on Disney, we can tell you that at Financial too, and on frankly any stock that you guys want to type in. So I hope that was helpful and that answers the question. Now let's get back to some other stocks. Oh, by the way, the next question is this. Let me bring back up Financial. The webinar. Next week, probably midweek, we're going to do a webinar. I don't have the registration link ready yet. I'm going to work on that this weekend. Just keep your eyes out for it. We're going to look for stocks between now and the end of the year, and also to kick off 2019. Again, using the stock's own data as our secret weapon. And it's really empowering and confidence building that you're not relying on hopefully, some black box algorithm, but just this is what the big money seems to do with these stocks. And the proof's in the pudding. The proof is in the data. So just keep an eye out for the invite. You'll probably see it in the Sunday video. I should have it done by then. Now, let's go look at some other stocks. Let's take a look at NVDA. NVIDIA is out with earnings. The company was only moving a couple bucks. If we come up here, you can see NVIDIA closed up a buck. It's now around 208. It was as high as 211, 2012. So it's really just going back and forth right now. If I go back out here to a 2-year daily chart, the upside target is pretty much back in the upper 280s. That is substantially higher. So if NVIDIA can hold its ground here, stay above the red line, it's still bulls in control, and they would still have the edge here. So I'm going to keep an eye on this one myself as well. There's a lot of room, 20-30% upside potential before it hits major resistance. Walmart had earnings, it gapped up. Let's go ahead and zoom in. Closed off the highs of the day. So we gapped up there, top left up into 124s, then came all the way down here into 120s. This might look like a really ominous bad candle with big volume. There was clearly a lot of selling because, right, it came off those highs. but it's above the orange and the red. At this stage, if I was bullish on Walmart, where would I get concerned in the short term? Again, purely using technical analysis, when it gets below both those moving averages, because they're tight together. In my opinion, there's no reason to use the 20-day EMA in red as a stop, because 50 days a lousy dollar below it. And if you look back over here just a couple days ago, look how the 50-day cradled the stock and stayed above. Somebody, big money, was defending that level. If it closes below the 50, that would be a stop out on the short-term bullish trend on Walmart, in my humble opinion. Grubhub. Grubhub had gap down huge. We talked about that on earnings. It's now coming up. Now, here's the thing with Grubhub. It's still trading on a closing basis within the actual candle, which occurred from 9:30 a.m. to 4 p.m. Eastern, back there on the 29th, right before Halloween. Once it closes outside of that candle to the upside, the target's all the way back up there in the upper 50s, 58-ish. Now, of course, there's the 20-day EMA in red. The 50-day in orange acted as resistance here and here. Those could be other stops along the way or other targets, but the big target would be all the way back up there, and that's simply just called a gap fill. How about Kraft Heinz? This is one that I've been watching. We just highlighted it yesterday. Today it was down big, 7%. So I went news hunting, and it seems that Goldman Sachs, decided to downgrade the stock. That's the only headline I could really find. And the stock craters below the 20-day. So if I was bullish in this situation and the stock gets below the 20-day, purely on a technical basis, I got to stop myself out. Fundamentally, that's a whole different game, because how long is the holding period? Personally, Goldman just simply downgrading a stock, dropping 7%, I think is overdone. They've been known to do not nice things. They call their clients Muppets, etc. It's all been, out there in the news world. But it just seems a little excessive. However, I love technical analysis, and the fact the stock closed below the orange line, where if I was a value investor or something, where do I think support could be? It would be right here on the big move up from earnings. I would come back down here to maybe upper 28s or even into $29. Pretty much the same thing, which is where the 50-day is. I could put potentially, again, in a paper trading account, look to buy there, and if it closes below the orange, then I'm out. And that would be a tight stop. But as it is right now, there's too big of an area from 31 down to 29. I mean, that's $2 on a $3 stock. That's a lot. It's about 7-8%. All right, so that is it. Hope you find these videos helpful. Again, keep an eye out for the invite for next week's top stocks for year end. And that'll be a big, fun event too. Wish you guys all the best. Have a fantastic Friday. I'll see you in the next video.